Oh, we filled a bit below the all-time high, actually. Ding ding, by the way. Still off into close, too. Yeah, all-time high is still 53.25.49. That's the third test at a lower high, which is a consecutively lower high, as a matter of fact, which is interesting, to say the least. This is not inherently bullish. I mean, not only did the initial breakout from consolidation fail, but this is failing as well. I mean, I think Fed minutes are going to be far more impactful than people anticipate tomorrow. The market's really looking for some guidance here. Shameful display by the Bulls. It was an annoying display by the Bulls, but yeah, I mean, it is what it is. Top closed above $2 too, which is neat. BNED closed at 54 cents. So holding on to that $50 call. This moves in the overnight session, especially to the upside. The may have to reprice options in the morning, which could be very bullish, right? Yeah, because the Fed chairs haven't been crystal clear that they're not dropping rates anytime soon. Well, they've been very clear. Here's the problem, right? Is that they've been clear that they're not dropping rates, but they've also keep inferring that they're going to cut rates by the end of the year, right? They keep saying things like I could see one more cut, or only one cut doesn't make sense, stuff like that, which is bullshit, and they know it because inflation is heating up still, and because their rate is not restrictive. But they're still telling the market, our rate is sufficiently restrictive. We are slowing down growth, right? But even if they slow growth, that just means that the deficit spending is going straight into inflation, right? So in a way, they're saying we're stagflating, but that's okay. Don't worry about that right now, right? Like we're slowing growth. Ignore the inflation that's going up. The April report didn't put inflation back on track to the downside. It just put it. It's still perfectly on trend and continuing up. It didn't revert anything. And PPI is hot as fuck. Yeah, so PBR, I mean, I've never really written this up. This is not a play that I would present to you guys, right? Because it carries a ton of like geopolitical risk factors, and investment in it because of the dividend being so high really encourages a lot of capital be put in. And so, while I would never suggest this to anybody, I sold when they announced the new CEO, just above 16. I'd probably look to get back in after I get a feel for the new CEO. Maybe we get like a quarter's worth of earnings and see how things are going, and then because political alignment with the board and the CEO are very important. Now, previously, the prior CEO was against the Brazilian People's Party, who ultimately owns the company, right? And was interested in protecting investor interests in PBR, and he fought for that, and he ensured that dividends were distributed. The new CEO may not, right? And if the new CEO does not fight for investor protection, uh, the dividends may be revoked, right? Which then makes the play really not worthwhile. So yeah, I mean, I'm gonna wait for it to fall. I know some of you guys have bought it anyway. I'm gonna wait for it to fall, kind of see where everything falls into place, and then if it still looks promising, I'll get back into it. The government did approve the most recent dividend distributions, so that's a plus. I think there's another X date coming up on June 13th, so maybe I'll consider getting a little exposure before then. But I've already got the 42-cent and 68-cent ones locked in. Yeah, or the dividend will be lower, which will inherently affect the share price. GME really didn't do too great today. I mean, it kind of just sat right there at the top of that lower boundary for gamma, and not much happened. I mean, it dipped a little and bounced back off of 20, which is to be expected, right? Unless you cross over 20, then the upside move is pretty easy, and it still can chop between 20 and 25, right? It's not just the 2250 range. Um, it can actually extend further out than that. But as this occurs, more and more of that Vega is going to get pulled off the chain, and the short vol is going to be less and less IV exposed, and suddenly those breakouts at 25 don't matter as much, right? And then the breakouts at 30 don't matter, and the breakouts at 40. And it's going to take a while to grind down, but it is still grinding down, and that's ultimately bearish over time. Upstart, nothing really. Fubo, also nothing. Top was kind of interesting today. Weird spike in liquidity, and it held $2 into close, which is kind of important for continuing to apply pressure. There's still short calls at $2. There's a lot of short calls at 250. I think it's still got a little bit of potential to complete like a second run. But we'll see. That one's pretty risky and tends to get shorted really fast after it does spike. Beyond not really doing anything. Go EV looks boring. It looks like they're just shorting it. Beyond looks kind of crazy. Now the falling price in after hours is bad. They got it back below 50 cents. But the close at 50 was nice. And it's still really sensitive as long as we stay right here around the 50-cent strike. So, if we hold the bottom of this consolidation, right, and bounce again, T plus 2 from now, we're still up 74% on the day. It's a very big move. These can keep compounding and escalating, right? As long as interest at that 50-cent strike stays high. So yeah, this one can start to develop a bit of a trend, and there's still shorts underwater there, so it can get squeezed out. I know everyone's been talking about this because I brought it up on the weekend stream, but FSLR is doing obviously really, really good today. Nice breakout from kind of this period of consolidation. Up 8% on the day, or $15. This has pretty strong call interest all the way up to 52.20. And then even beyond that, there's interest is starting to build between like 52.30 and 250, and even above 250 there's some interest starting to build around the $300 mark. So it's got a lot of room to run. It's a lot of those calls are long dated, so pretty decent amount of potential on it. Then ES still chopping. Rejection from yet another lower high marks a triple top here on this kind of ascending wedge that we've been consolidating in. Honestly, the downside support has been strong enough that this triple top's probably not that important just yet. And we still want to see a fail of this trend here to really kind of confirm any bearishness. And so, yeah, I would say that even though this is a triple top and it is a lower high, it doesn't really signify anything. And tomorrow's FOMC minutes may be kind of the tipping point for this top we're forming. Either we're going to break out higher from the consolidation, or we're gonna start to fail. And if we start to fail, there's not a lot of support. However, a breakout to the upside is kind of range bound. There's really only call interest between 53.50, 53.75 SPX. So not a lot of range to the upside, but to the downside, a failure of 52.75 could mean, or 52.64 really could mean a test as low as like 5,000 again. They're to be stinking rich if FSLR hits. I'm sorry, 230, not 52.30. Stop being dickheads. Commodities actually pulled back a little bit today after 2 consecutive days of gapping up higher. A little bit of cooling in precious metals, but not too much. They're still going up pretty rapidly. And even though gold kind of hit a bit of a sell-off at 24.50 yesterday, it does seem to be recovering really quickly. And remember, every time it tests that 22.50 level, the chances of it breaking higher are going to increase. Dollar looks still pretty resilient. Now we have a bunch of foreign data tonight. Japanese balance of trade, and I believe machinery orders, and then Great British inflation, core inflation, and PPI, and then I think their EU's having or ECB's having their non-monetary policy meeting in which they will discuss monetary policy. And yeah, we talked about this yesterday a little bit. It does appear that the EU and Britain are going to be prepared to cut rates long before the US. And that's one of the reasons the Fed is leaning so much on like, oh, we'll get a rate cut in there by the end of the year because they don't want to diverge too much from other central banks. Unfortunately, it does look like that's going to happen because the EU and Great Britain didn't try to spend their way out of their economic downturn like we did. And thus, they are having a stronger recovery with lower inflation. But that means they're starting to import their inflation to us. And as the recipient of that inflation, ours is now rising and our growth is slowing. So yeah, a few things to affect dollar value overnight, and it is getting close to kind of breaking up here. I would say if it does, we're probably going to get back to that like 105 level where we've seen so much stability over the last couple of months. Correlation broke down again today, but most of it in the end of the day, it was actually pretty flat to slightly down. So a little bit of leaning into that dispersion trade. Largely, we know that this is in tech, especially with Dow and Russell underperforming so much. Japanese carry trade peeled back a little bit today, and we saw a drop in the forward returns on volatility with the massive vol short that's been going on. However, we're still getting higher lows here, and despite VIX being down, almost twice as much as it was on the previous low. So that position's getting a bit overcrowded. And that means diminishing returns on short vol, which means less leverage to pump the upside. Not really any moves in bond vol. Skew pulled back a little bit yesterday, but not much. 71.31% of the S&P above its 20-day moving average. And it looks like we're a little bit higher than yesterday at negative 37.33% net correlation between VIX futures and cash VIX, although we are down week over week from the prior week, which was at 44%. We are up a little bit from yesterday, and this will continue to change throughout the week as this bar prints. Fed fund futures are pricing in just, 0.34 rate cuts versus, where we were yesterday at close at 0.315. Not a lot of change there, and that just seems to be going back and forth largely with yields. So I don't think we've cut the September rate cut out of projections, and I think we're still pricing in about an 85% chance of that happening. It's gonna take a pretty clear message from the Fed to cut below that final rate cut for 2024. And if we do, that'll be very bad for financial conditions. Anyway, thank you guys so much for tuning in. I appreciate it. I will see you bright and early tomorrow morning. Have a good night, everybody. Later.